The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, we're back. I just did the update, and now we're live on the noon show, noon till 1 p.m. Eastern Time. This is the Tiger Technicians Hour, and it's my pleasure to be here Monday through Friday when we do have Mondays. Seems like the last three have been off. Coming Monday, we will be here. So 2799.25, just down minus 450. The Dow is really much weaker. I've been focusing on this for a couple of days for subscribers. And what we're really looking at is that there are certain stocks that have gone parabolically higher. And under any circumstances, no matter how you look at it, they are really close to having a pretty decent consolidation. It doesn't have to be a smash or a crash or anything like that, but a consolidation at the very least. I'll go through those in a moment. Perhaps tomorrow in the Technical Friday, we'll go through some of these and talk about the mega bull market a little bit more. Let me just do this right now. The E-mini at 2809.50, the high yesterday, had a high today at the 2808. I believe it was 50. Let me just double check. I wrote it so many times. There it is. So, yes. So what we're looking at, the high today is 2808.00. $1.50 off the high of yesterday, all-time high of yesterday. Now, what's really interesting about this is that the 120-minute chart on the right, it snuck to a new high above the 2808.50 high of the 16th. Then there was a really sharp intraday pullback, 400 points, 2769.25, bounces back and goes to a new all-time high. So let me just do a little Chapman wave methodology because I've been asked about this. Because the starting point for that buy mode was way down at 2736.50 on the 10th of January, this pullback never took that out. So there could, in fact, be a double top, and there could be an arch formation. Now, I'm not getting into any of the politics of what's going on right now, other than to say there is politics going on, and that is something that we might see. We might, for the first time in a while, see funding not go through, and that'll be really a sharp, it'll be a big disappointment to the stock market, and there'll probably be a pretty darn sharp pullback. However, this is what I really want you to look at. Regardless of what's happening in the news, if you're just looking at chart formations, look at this E-mini. It goes up. The 9-period moving average is still strong. The MACD is still strong. The stochastic at 91% is strong, but it's starting to dip a little bit, and the on-balance volume is not quite confirming the latest highs. That, in essence, is saying that the daily chart, as always, will be leading the weekly chart. The weekly chart is still very strong, and the monthly chart is still very strong. So the way I look at it is we have to look at numbers, and this is one of the reasons why every time I said that the next 1,000-point millennium level should become a resistance point, I also said very clearly that if at, say, 24,000, a close about 24,100 will mean that I have to change my mind because that would be very important. But it fails at 2,400, that's something else. I say the same thing at 25,100, and I'm going to say the same thing at 25,000, at 26,000. If it closes above 26,100, let me show you this in the Dow chart. We've already gone to, on a closing basis, 20 right there. Yesterday's close was 26,130. So I'm saying that if there are two closes above 26,100, basically what you've done is you started to push away from the magnet of the 26,000 level, and that could produce further gains. But if we start to pull back and have 2 out of 3 closes below 26,000, that would suggest, yes, there's a chance that the 26,000 level will become some kind of both a magnet and a repellent at the same time. I just wanted to be clear because that's the only way. I have to look at different parameters. I can't blindly say, oh, this is a spectacular bull market, we're just going up forever. We do not go up forever. And you cannot go up forever when you're looking at certain charts. So let me go through this very clearly. The Dow has a 9-period moving average support at 25,653. We are almost 350 points above that. So it's going to, and the MACD is still very strong. Stochastic is still strong, above 80%. It's at 90%. So to get the MACD to cross negative, to get the stochastic to go under 80%, to get the price under 25,655, it's going to either take one whopping smash to the downside or maybe even 2 weeks of lower highs and lower lows. And my thinking here is that if we survive this weekend, that is, whatever gets past is satisfactory to the bull market, then there's a chance that if there is a consolidation going to take place, we will see it with slightly lower highs and sharper lower lows. Slightly lower highs, sharply lower lows. That's the pattern that I'd be looking for. Now, on the S&P, let's do that very quickly. You've got the S&P right now trading at 2797.51, down 5. It needs to break under 2768. That's the 9-period moving average. But to get the MACD and the stochastic to really turn negative, I would suggest to you that it really has to get down to the 27, probably around about the 2766, 63 area, somewhere around there, to really start a negative pattern. And if you're looking at the QQQs, which are right now down, no, they're unchanged. They're up 0.01 at 165.80, holding pretty well. And one of the reasons is that the SMHs, and I showed subscribers to my opening call this morning, I said, I'm getting real close, but I don't want to do anything yet, watching the SMHs real closely, because you've had in the Chapman wave methodology, what you've had is a left side, right side price tie match from this high that was made at 105.83, twice two highs at the same level on the 22nd of November of last year and 24th of November. And then it pulls back sharply to 95.02. It's just gone to leg D, and this is the price. I use this particular doji candle as a midpoint, also based on the Chapman wave inside wedge target line. And that suggested that by yesterday, we should get to 105.83. We went to 106.06. We broke that level. And today we went a little higher. We went to 107.15. Yep, as a high, trading at 106.62. Semis are actually acting very well. The weekly chart tomorrow is going to be very important. If there's a close nicely above 105.83, that portends even higher prices. If there's a failure, then that says, oops, cup formation, be careful of a double top. But it is, in the monthly, has gone to a leg E, 120-minute chart is in leg E. A lot of this is pointing to some kind of toppiness. Gold, at this particular point, gold is down 9 at 13.30. I think it's worth taking a little time when we get back to talk about gold, and we'll talk about gold, silver. We'll go to the dollar, we'll go to crude oil, we'll go to bonds. We'll be back straight after this break. Dow's down 94, S&P's down -4. Basil Chapman, Tiger Technicians Hour. Be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. We're back. So we're looking at gold down 8.7 at 1330.50. It's holding the 9-period exponential moving average. The MACD, this is the daily chart on the left. In the middle is the weekly. On the right is the monthly. Let me squeeze the monthly so you can see it in a larger time frame. Longer and larger. See, there's a big cup formation forming. Couple of things. Gold stochastic is at 88%, still very good. On balance volumes just dipped down a little bit, no big deal. What I'm really looking at is that this pattern that we saw, this kind of oval pattern with a breakout to a peak C, everything about it suggests that there's just enough strength to go to a leg D, which should have to be above 1345.0. That was the high of the 16th. But at the same time, the body of this oval pattern that we're looking at here, kind of think of it as a stork leg formation, leg, oval body, neck, beak. Beak goes into the body when it comes down. And what we're really looking at is there's a chance that it might just have to do a little bit more testing of the 1317 to the 1316 area. A break under 1316 says, oh, it's a little bit of a longer timeout. If it holds that, it says, oh, be ready for a quick pop to the upside. And one of the reasons why I'm looking at it like that, and one of the reasons for subscribers, we are long a gold stock, which has had a very nice move. It's in a D, like many of the stocks we have. We've got infrastructure. We've got we really have covered the gamut. We've got auto. We've got specific areas that I would consider to be the macro picture and bank stock. So what we're looking at is that within the rotational aspect, some of these stocks that have had really good moves are ready for a bit of a pullback. Gold's had a big move to the upside, and the big thing is that within the context of weekly charts, it very often has this big spike to the upside and then takes a big breather. Is this going to be a deeper breather? In other words, is it going to go from this the rally that it's just had? You see the same thing here in the silver. It's like a W formation. For that W formation to garner much strength, and silver made a peak D with the left side, right side price time match coming in yesterday, didn't quite make it to the high that was the anticipated target, 17.48. on the 17th of November. Yesterday's high was 17.45, just a tad less, and now it's just consolidating the gain. But the MACD is pulling back. Stochastics very weak, and silver to me very often is the confirmation. It's like the little, it's like a little pilot light. If silver isn't going to really confirm and sometimes lead the gold either up or down, then gold will follow and be more or less a captive to silver. And right now, I think, in a sense, gold is a little bit of a captive to silver. Silver's not acting badly, but it's not acting as well as it should. So I'm watching it, and the weekly chart says, hey, by this time next week, a week from today, silver better be up in the 17.60 area, because if it breaks down below 16.71, that's just not going to be very good. So silver's really something I'm watching quite closely in relationship to the gold. And if you're looking at high-grade copper right now, yes, it's still under the 9-period exponential moving average. It hasn't closed above the 9-period moving average since it broke down on the 5th of January, and since it made the high on the 28th at 3.72, and now it's down to 3.20. So it's getting close in the technicals to some kind of a balance. This is a high-level consolidation. Weekly chart holding the 9-period moving average support. Let's go to the dollar. Now, this is going to be very interesting. Why? Dollars had a lower low today. Tried to rally earlier on. It had a really nice spike to the upside, one of its biggest up moves that it's had in a single day for quite a while. Whether this is a hint of something to come, I'm not sure. But this is tomorrow's the second week that it would have closed below. See, 91.01. I need to double check. I don't want to talk out of turn here. 91.01 was the low of the week of the 8th of September, and it needed to close above that, and it closed at 90.90. It closed below it last week, so this is the second week. I don't like to give it more than 2 weeks to get back above. A close above is really important in this lowercase h pattern. Haven't got that yet. So I'm watching dollar really closely. It's getting closer to the 89.65 200-period moving average in the monthly chart. A couple of things I want to do quickly, and then we got a bunch of questions that I want to get to. TLT down sharply at down 81 at 124.06. The 123.08 level is the 200-period moving average support in the weekly chart. I don't particularly like this pattern. I want to show you this. Look. Here's the my triple yield chart that I show my subscribers to my opening call every weekend. 30-year is rallying. It hasn't gone to a new recovery high, but the 10-year TNX, in fact, the brown one, has gone to a leg D and rallying quite strong. It's up today. The 30-year is up 31 cents, and the, where is it? The TNX is at 26.02. It's up 24. And the 5-year is screaming to the upside. It is up as well. And that, you see, this is very interesting. The 5-year at 24.06 is still only leg C, and they're getting closer and closer. I think this is something we have to keep our eyes on, because the 5-year and the 10-year are so important in the over macro scene of yields and what they imply. So that's what we're watching. I want one thing only. I want to go to the crude oil. Crude oil right here is up 11 cents. Had a peak E in the Chapman wave in the daily chart. Leg F in the weekly. Leg B in the monthly. So far, it's holding well. 63.17 is the key support to 62.42. That's the area it needs to hold. If there's any further weakness, it's at 64.02. Now, quick question. Not a quick question, a question. STM. I was asked about this. Got a leg D. Yes, correct. I also get a leg D in the daily. Let me just open this up a little bit. See, this is the daily. STM is ST Microelectronics NV. It's a Netherlands company. It's had a spectacular move. It's broken above the left side resistances. It's at 24.92, up 58 cents. So the question was, it was a really good question, and if I can just find it right here. Hi, Basil. I took a small position in STM last week at 23.20. Good. It's up $1.70 from where you bought it. Today, it made a new high and looks like it will do a 1.5 to 2 times the volume. I have had it in leg D, correct? The weekly and monthly charts look good to me. Earnings come out next week, I expect. It will probably trade sideways until then. What do you think of this stock? Well, it's a stock I used to follow really closely. I don't know if we ever had it on the list for a buy, but I followed it for years. This really goes back. STM Electronics. I used to have it notated. I don't anymore. But look at the left side, right side price time match, and it says if this continues to hold strength into February, that's really important. Not just January. It has to go into February. Then the high of January of 2004 at 29.90 would have a left side, right side price time match. And I just show you how I do this using the Chapman wave methodology of the inside wedge. That would take you right there. And that would say, wow, that's interesting. That would say that by, what month? Is that May? Yes, by April, May of this year, if it has a good February, there's a chance it could hit that 29 level if it continues to rally this strongly based on the way the cup formation, which is really a very large bowl, is forming. I'll be back straight off this. Basil Chapman, Ignition's out, Down 9.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're back. So I just wanted to finish. That's the positive side of STM. But what I did want to point out is that if, for any reason, this gap, especially a gap at an all-time, well, not an all-time high, a gap at a high, the all-time high was up in the 72s back in February of 2000. If there is a pullback, 2393 to 2350s is really key support on the shorter term, number one. Number two is there's a pattern that I call the Chapman wave drop bucket formation. That's the double top cup at the top, like inverted H. What happens is I always look at it as if this was the handle of an axe. right there. And it's like the bucket of a backhoe picks up all the trash, lifts it up, and then just opens it up, and everything falls out. So that's that, and it opens up, and that will happen if at any point it takes out 23 support, more than 50% of the left side lip to the base, then there's a good chance it's going to retest the bottom. If it takes out the bottom, be careful, because there could be a one-to-one to the downside. I'm saying that because we're in an area where the whole high-tech sector has been absolutely on fire, just stupendous. And it looks to me, based on the monthly chart, that you've got to be prepared that something like this does have a pullback before it actually starts at big leg D. So I'm looking at this and I'm saying the positive side would be Friday. There's a close above, nicely above 2480. We're looking at STM, ST Microelectronics, Dutch company, trading at 2497. If there is a push quite a bit away from 2480, and now it's only 17 cents above that, but if it can get close to the 26s by Tuesday of next week, not sure what day you said earnings come out, but it gives it a nice base of support. If earnings are just a little bit off, it gives that nice cushion to make to give a pullback all the way down to 2316, the 9-period moving average. I don't want to see that pullback occur when it's already down at 2330. Then you got yourself 2 points. So all I'm saying is the monthly looks fabulous. The weekly looks really good, but it's the cup formation that has the potential to make either another cup or a handle. It needs to get away from the left side high of November, the week of the 10th, and that'll be very positive. Just to be clear, here we are. Okay. A couple of other questions came in. So what I said to subscribers this morning, and I've done this now for a few days, is that I'm really concerned about stocks like a Caterpillar that has gone vertical, even though it's in the sweet spot of everything that's going on right now, up 46 cents today, 168.96, made an all-time high of 173.24, leg G/C. If there's a good report for the some kind of compromise going on, for the bill, we could see one big spike, maybe it goes to a D. But I think that Caterpillar is getting very overbought in the shorter term. The monthly chart is still very strong technically, as is the weekly, but shorter term, I'm worried about that. I'm worried about DE, which is Deere. Same thing, made its high 4 days ago, holding nicely, but wow, this is kind of extended, especially the monthly chart. Look at Alcoa. I mentioned this as well for a couple of days now. Big gap down, earnings disappointment. Oh, something's not right. Down 4.88 at 52.11, down 8%, 8.5%. Made a peak E-top. This is I'm a little concerned about some of these vertical moves in some of the stuff. What was the other one? Oh, and Boeing. Boeing, down 9 at 342.08, leg D. These vertical moves invariably, yes, they can continue. Everything can continue. But when they start the consolidation, that's when you've got to be a little bit careful. So the question was, BA, can it break down 340? Yep. I think 329 is the 9-period moving average. My eye says that over a period of 3 weeks or 4 weeks, it wouldn't surprise me to see Boeing coming to the 330 to the mid 320s. 321 is really very important support. I don't think it's going to the 305 9-period moving average in the weekly, but shorter term, I just think that this is a period where we've got to be. Everything is. It's as if you're looking through the world with these glasses, these rosy glasses, and rosy could turn red. That's all I'm saying. That I'm getting a little concerned at the speed with which these stocks went up, and everything just has to be absolutely perfect. I just don't see that happening. So the other thing that I'm looking at here is within the context of the markets. If everything goes right, what are we looking at? Well, if everything goes right, then you're going to see some of the Dow stocks that were probably laggards start to come on stronger. It also means that if you're looking at the Exxons and the CVX, that's the Chevrons, two of them are multinationals in the Dow. They are very close to resistance, like 135.10 was the high in Exxon back in July of 2014, plummets to 69, gets cut in half, and it comes all the way back in leg E. So anyway, I look at it, things have to be absolutely perfect for this to work out. However, the strength of the weekly charts and the monthly charts still put me in the camp of saying higher highs in 2018, number one. I have numbers. I don't like to say numbers on the upside. It just sometimes they become meaningless because other things happen in between, and then you're kind of stuck with that number. I don't want to be. I don't want to be locked in. I myself do not want to be locked into thinking other than to say buy modes are permeating the market. I'm getting close to short-term toppy action that I think is quite important. It's the reason why we have a short position on the Dow from last Friday, still in place. We'll see what happens. Still have a very long-term position from back in October in the 22,300 area. So, okay. So that's that. Next question was SPY. It didn't make, I spoke about that. MS, Morgan Stanley, I saw today when I was at the gym. Morgan Stanley made a new high. It's in leg D in the daily. Very nice chart formation, good technicals. Weekly chart in technicals have just been steadily improving, same as the monthly chart. So I've got D in the D in the daily, E in the weekly, and a D in the monthly. To tell you the truth, a lot of what I'm doing here on a purely technical basis is suggesting that it would be much healthier for the market to have a timeout. All I'm saying is a timeout. It doesn't have to be a crash, doesn't have to be a smash, but it has to be a timeout to refresh, because so many stocks are bumping into longer term resistances. Some of the technicals on a daily basis put them in quite overbought areas. That's what I'm looking at. I like them to have a healthy pullback. A lot of stocks that we would have liked didn't get in, or we had, and then they took off without us. I like those. Now, if you look at the IYT, which is this is the iShares Transports Average ETF, leg E strong up against resistance in the monthly, leg E in the weekly, almost vertical, and a peak E in the daily, 206.73. When I put this together, I'm saying, geez, time for a rest, surely. I'll be right back. Basil Chapman, Tiger Technicians Hour. Dow's down 94, S&P's only down 3.9.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. So I can't even remember if I did this. Yeah, the question is Morgan Stanley. Yeah, didn't I just say Morgan Stanley got so Morgan Stanley 55.50 up 15 cents. This is doing very nicely. It's got a cup and handle breakout, a cup and ladle Chapman wave cup and ladle breakout, which says you should go to a D. Hey, you're in D right now, so I like it. I think this is in exactly the sweet spot for this year are going to be the financials that have what they term again, the high finance. What do they call them? High something. They do analysis for people who are coming in and wanting to have their portfolios assessed, and I think Morgan Stanley is right in that category. That's the reason why I think Bank of America with Merrill Lynch, I think that's why they're benefiting. I think that's going to turn into quite a decent product over the coming 8 months to a year. So Bank of America trading, what was the question? Bank of America, Goldman, JP Morgan, trading at 31.45. We still remain long this. It's at 31.44 right now. It made a high at a peak D on the 16th at 31.79. The 30.85 is a 9-period moving average to 30.50s. That's key support over the coming week. Weekly chart, technicals are improving, the monthly as well. And this says, any real sharp pullback in the financials, if you look at the XLF trading up, down 3 cents. It was up a little earlier at 29.34. Made that peak D in the Chapman wave just 3 days ago. Leg D in the weekly, leg E in the monthly. Ooh, that's a lot of D's and E's and F's. So I'm looking at financial planners. No, that wasn't the term. It's a high net worth, I think they call them high net worth clients. So anyway, it's not even high net worth. Actually, everyone, you hear reports all the time on the radio about or TV about coming and see us, or that we're having this financial discussion, a free lunch or whatever it is, and they're all trying to pick up clients and they've got portfolios that are basically machine made. In other words, they're electronically derived. Whatever age you are, so it's very interesting. They make like it's really personal, but most of the time these are cookie cutter products, and that's I think going to be the downfall eventually of this stock market. But we've got a long way to go. Okay, let's get back to questions here. So this is Swiss franc. Swiss franc. Oh, I used to have it. What is it? Is it CH? Anybody give me a symbol for Swiss franc? I'll try to do it. You see how ASA is hugging the 200 EMA, ASA right here. This is a stock we own. This is ASA, Gold and Precious Metals Limited, trading at 11.63, down 9 cents. Made that leg D. Now it's at a peak D, holding the 9-period moving average. And that 200-period moving average, the orange line, That's going to be really important. I think it's going to wiggle around there, and we'll see how long it takes before it can actually break out. The GDX, interesting enough, is only in a peak C, pull back to the 9-period moving average, but the GLD has made its peak D. I haven't got a down arrow because it hasn't closed decisively below the 9-period moving average, and the MACD is still strong. The stochastic is still strong. Nothing wrong with this chart right now. What was the question I had? Yeah, Swiss franc. I don't see. I just can't remember offhand what the Swiss franc is. A CH something other. Let me CHL USD. Let me just give that a try. The USD CHL. Why would it be CHL? It's just an. Sorry, can't remember. CHF, of course. CHF franc. There it is. USD. Thank you. So here we go. USD CHF. What was the question? Question is, will break down for real? What's the Chapman wave count? So USH, USD, CHF. Here we go. So yes, breaking down. So if you look at this, the Swiss franc US dollar currency pair, it looks a little bit like the USD JPY, which is the yen. Look, keep your eye on the middle chart right here. That's the weekly. Here we go. See that? Very similar. So currencies, the weaker currency, in this case, the franc and the yen, are following the dollar. And if the dollar cannot have a decent close, 90.46, wow, it's got a long way to go. It's got to go to 91.02 by tomorrow afternoon. Saves the day, at least short term. So the dollar, that monthly chart broke below support. That makes that 200-period moving average a magnet, and then it should become, at least for a couple of weeks, some kind of support level. All right, I think we've done those things. So NBO, was that NBO? NBO is not what I'm looking for. BNO. Brent, of course, Brent. Here we go. Brent made a peak D 5 days ago at a high on the 11th of January at 19.04. Holding nicely at 18.85. 1870 is the key support, 9-period moving average. And this morning it just went a little bit low. It went to 970. Oh, 972 and 9. That's interesting. 1872, 1870, but it looks like it touched it. How could it be higher? Anyway, so 1870 to 1850, that's the key support now for Brent. Huge move up in the weekly. I'm calling this F for now. I don't have to give any alternate count. And the monthly is bumping into up channel resistance, but it's in leg C. This has been terrific. So if it does consolidate, big deal. So it consolidates, takes a week or two, and tests the 9-period moving average in the weekly chart of 17.90, maybe goes a little bit below it, but I think this is a really good move, and it makes the 200-period moving average up at 19.95 some kind of a magnet and attractor to bring it up there at some point. So that's that. Couple of things. I was asked about steel stocks. So we've been long a steel stock. It's doing fantastically. The steel SLX, the Van Eck Vector Steel ETF, is trading at 50.45, down 38, made a peak G. I'm calling it a G for now because of the MACD and the stochastic. We're giving it an alternate count. And that was at 51.40 on the 12th. Now we're 3 days later. It's having a high-level consolidation. I'm calling this leg F for now. No other way to count it. In the weekly chart, and a leg F/B. My guess is going to be a B in the end in the monthly. But look at the way it's gone with the left side, right side price time match to 50.48. That was the target. It went right there for the last 3 webinars at least. I've discussed the steel stocks. We've had steel stocks. We still have a steel stock and doing very, very nicely. So let's see what U.S. Steel is doing. X is the symbol. There it made a high. 3 days ago, it went to a G. I'm calling that a G for now. 39.96. Let's call it a G. I don't see any reason to give it an alternate account, not at the moment. If there is an alternate account, it's a G/C going to a D. But in the meantime, look how beautifully it's done. And the monthly chart is right at resistance. This is long-term resistance from previous highs, making lower highs, 46.55 way back in 2014, 41.83 February of 2017, and now it's testing that line right there, right at resistance. I'll be back. Basil Chapman, Tiger Business Hour. Dollars down 93.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
U.S. Steel trading at 39.35. It does have a target of 41.83. It might have to wait for that. I'm not sure just yet because it's bumping up against resistance, downtrend resistance in the monthly chart. So if it does get to 42.30, that actually says 42.30. That actually says that the 46.55 high that was made way back in 2014 is on as a target. It's a little way to go. We'll see what happens. So the support, the key support right now is in the 37.5 to 36.5 area. This is shorter term. Question about ALB. ALB, whoa, Albemarle Core lithium ion batteries, peak E in the weekly chart, only a C in the monthly chart. You know what? Let's look at this again in about 3 or 4 days' time. Let's see if it finds some support. It obviously had everything going for it. Something's wrong right now. So give it a little time. I wouldn't be touching it. Where's the buy? You have to wait. I have a rule of thumb. in a gap down like this, if there's a lower low tomorrow, the very next day, then you have to wait a third day before you can even think of a bounce. If there's an inside bar and within 2 days it takes out the high of 118.46 in this case, that's if today is the high all the way through to the close, then you've got a nice bounce to halfway, maybe the 121.74 200 period moving average. Only as trades. Would I buy it as a longer term? No. Would I buy it as a short term? No. Would I trade it? Only as a trade under those conditions. So let's leave it. Let's look at it again about midweek next week. Just remind me, ALB. Okay. Now we're about to sign off. So let me do a couple of things here. Let's go to that VIX index. VIX index is up 18 at 12.09. It is in. There are 1, 2, 3, 4 green candles, and it's in the 12s. And we just hit an all-time high. So something either is telling us that money is being bought as insurance and that this market is going to go lower. I would say just watch this closely. By Monday, not tomorrow, but by Monday, if the Dow is below 25,850, that's very negative. And then the
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.